How's it guys, welcome to module 6, and in this module I'll be going over time frames and top-down analysis. So what you'll learn in this session is what is top-down analysis, what time frames to use, why time frames matter, and go through a few examples at the end. So what is top-down analysis? So basically top-down analysis is the method of analyzing financial markets by starting with the broad overview and gradually focusing on the narrow. So when looking at a security, an asset, or something that you want to trade, then you have to make sure that you're looking at the economic activities behind the scenes that are happening within the current trading week that you're trading in order for you to make your analysis. Because when looking at, let's say, an economic event that's happening during the week and you're trading a security that might be affected by that economic activity, this obviously plays an impact on the price, right? So that's why you look from the economic perspective, and then you go into looking at the charts, and that's when you're looking at time frames. So obviously when you're trading, you want to start in the higher time frames to identify what trend you're in. So I'll be going through an example of within the next slides or two, and I'll show you what I mean by this. But price action actually works better on higher time frames, where on smaller time frames it's ineffective. So that's what I mean. You have to be looking at higher time frames in order for you to make a decision, and then look at smaller time frames to get an entry, because the higher time frames will overrule the shorter time frames within that day. So looking at different time frames. So when looking at something that you want to trade, you should start on the weekly time frame and then working your way down. So when looking at the weekly chart, what can you see here? You can see that on the blue box where this horizontal line is at the top here, we have support. Okay, so you can see there's a lot of price that comes down into this zone and actually bounces off, and then when price comes back down, we see that we've started to find it at resistance. So it says proving turning point. So basically when price comes to this area, something happens. There's a reaction at the zone. So then when price came down, came back up to the zone, and you can see that there was an activity where price actually got rejected. And then now what is happening? It's risky to buy because look at the level. Whatever happens here, you're most likely going to sell off. So that's what you're looking at. So you can see at the moment this price is actually at a perfect level for an opportunity to go down in the market, because when looking at the previous market, you can see that when prices come up to this zone, what has happened? It comes down. So let's see when looking at the daily charts. So we know that on the weekly we are at a current turning point, so we know that there could be a potential reversal, so that's in our head, and then we are at the current resistance zone where it was support within the over the past year. So then now you take the daily chart, right? And what you have here on the daily, you have a bullish candlestick, so it's called a pin bar, which is typically bullish. And then if you look at the daily time frame, you might be tempted to buy the market, right? Because you have this pin bar pattern that basically implicates that you're going up. So it's a bullish pattern. But however, the weekly chart reveals that you had a powerful key level where the market could stop going up, right? That's how I identified earlier. And it may be better to consider selling the markets and waiting for a clear signal. So on the weekly chart, you know that is a major weekly level, like it says over here. And the daily chart is showing you that there's a pin bar, which is a bullish signal. But this could be invalid, so you're obviously waiting for a potential sell signal. So let's just go over here. So this is the same price, right? You can see that the top-down analysis approach shows that the weekly level was strong, a turning point, and that it should reverse here. And you can see that was our pin bar. So we had our buy signal over there, but you can see after that it actually came up to this level, and now if you look at it now, we are actually coming down to lower levels because the weekly level was showing that price actually rejected off there. So this was a false buy signal. But basically the top-down analysis wins. So over here it says the bullish candlestick pattern did not survive long after the market moved into the weekly turning points. Elements from the higher time frames can be such a powerful feature that they can dominate the signal within the day. So you always have to look at the weekly chart and then go down into other time frames, because if you're doing Whereas daily traders will look at the weekly and find the direction, but when they see that pin bar pattern, obviously within the day you can catch that trade to the upside, but within the coming weeks, you know that we're at this key level where price actually tends to reverse from. So your higher time frame bias is a reversal is going to happen at this zone. And then looking at, so this is the weekly chart. You can see that we had those previous reversals over here, and if you're doing a swing trade, you would obviously go in a short here instead of a long, where the day trader would have gone long within that day, and he would have been right. But it just depends on what time frame you are actually trading. So basically what you're doing is you're going on higher time frames and you telling yourself what is happening in the market. Are we at a key level? Are we at a resistance? Are we at a support? And if so, what are the chances of the probabilities of us coming down or going up, depending on where you are in the market? And on the weekly chart, the probability of us coming down was definitely more likely than price going up. But on the daily charts, within the one day that we had, it was looking like price may come up to the level, and obviously it did. So it just depends what time frame you are actually trading, but definitely looking at the higher time frames will give you a confirmation that now you can see we have this massive bearish engulfing candle, which will indicate us to push down lower. So just make sure you're starting at higher time frames, getting your direction, and then going on to smaller time frames to find entries. Thanks so much for watching. I hope you guys enjoyed, and I'll see you guys in the next module.